Aloha, everybody. As we are in the middle of a long 3-day weekend, we can go ahead and look at the averages a little bit longer this weekend and soak everything in. But what we do see here is that everybody was making mention of another test of the 100-day moving average. And I tell people, successful test of support is good when it's orderly, but whenever you have a hilltop rollover one test, hilltop rollover two test, hilltop rollover three test, and bounce, the odds that it's going to work is very low. But everybody's clinging to the 100-day moving average. As long as this is what everybody's focusing on, then it's key. So we have to respect that what we saw on Friday was day one of a rally attempt. Volume was lower than the day before on the NASDAQ, and then whenever we go look at the New York Stock Exchange, you can see it was above average, so that was good, and higher than the day before. Still trending below all the key moving averages for the NYSE, as all of our indexes are still at a sell signal on an operational level. That being said, though, we still have plenty of longs, very heavily long, about 50% long plus, and we have very small hedges that we'll be getting rid of very quickly if we do continue to reverse higher. And we have some cash. So whenever we do start to uptrend again, if we have better long signals, then we can go ahead and enter those long signals and get rid of our weak holdings. But for now, still overall, this is one day of a bounce. And a key thing to look here is now, we got more clarity with our technical indicators. They all look pretty bearish. TSV is trending down on the S&P 500. MACD is clearly trending down on the S&P 500. New York Stock Exchange, you see the same thing. The only good thing is that there's some positive divergences, but there's nothing to really say that there's a positive divergence of with price. If price is making lower lows and we had TSV and MACD making higher lows, that'd be one thing. But right now, there's just no confirmation anywhere. Russell 2000, once again, also, they all look pretty negative. And the big key thing to remember is that none of them are oversold. None of them are so extremely oversold that we have to rally. Then take into the fact that the volatility index isn't even at, new highs or even new December highs, so there's no fear out there. Did you see the II survey this week? Did you see the AAII survey this week? Does it seem like this pullback has scared anyone? So I'm not going to jump on the bull bandwagon just yet, even though we've successfully tested the 100-day moving average. I'm going to need to see more proof, and if that does work out, wonderful. But for now, we're going to take it easy, and even though we're in an operational sell signal, it means that we have to raise stops extremely tight, which we do have stops tight. So if we do break down on Tuesday and start selling off for the rest of the week, we'll be taken out of a lot of our long positions with gains intact or very tiny losses, and then we'll have our hedges working to make us some money, and then we'll be even higher in cash ready for an inevitable low. Like I said, it's hard to believe that a bear market's going to start here without a series of interest rate hikes. It just doesn't happen often. So normally have an inverted yield curve that signals recession ahead. So I'm not that bearish. However, we got some house cleaning to go to do BIS, that new long signal. I really thought that biotech had a chance to really break down. It didn't happen. Higher volume reversal. Got to get rid of half of it minimum. Possibly 75%. What I think I'm going to do is I'm going to sell off half, put a sell stop just below the 4150 level, and then another sell stop just below the 4050 level. So if it sells off immediately, we'll be completely out. But if we do gap lower in the morning in the market and then just sell off, I'll go ahead and be out of most of it. SQQQ, we're still fine. No need to do anything there. SPXS, what I want to do, though, is that position that we just added to on 115, I want to go ahead and take half of that off with this closing at 2166 below the open on above average volume. I know we're holding above the low a day, and technically you can do that. You can take 25% off and then go ahead and put some with that other 25% with a move below 2155, which is something that I'm considering. Not quite sure yet, but we'll figure it out as we go along, but I'll definitely have to mess around with the sell stop levels. I might have up to 5 different levels of sell stops on these hedges just to, because I don't want to get completely shaken out and then us reverse higher. We have 2 new long signals, kind of solid new long signals overall. If this was not a operational sell signal, I would go ahead and push it on TERP, but I really can't because earnings on the 28th. Earnings per share in the most recent quarter, explosive. Sales have really picked up. They're getting very explosive. 2015 estimates are good, and overall this is a beautiful technical pattern following the gap up in November. Basically a successful test around the 50-day moving average. Another one here in January, and now we're breaking higher above the 50-day moving average on a big, huge volume surge, biggest since the IPO date, and with BOP going from negative yellow to almost max green, pretty damn near good enough. If this was under a buy signal and we get this pattern, especially with the move up in this green BOP to max green, this is a 5 to 10% signal, especially with how little as we have at risk. First sell stop below 30, next one below 29.57, and then you can have an ultimate final sell stop below 28.18, and you're still barely just risking over 5%, so pretty good. Then the Perfect Speculator 2 scan has produced H&T. H&T has refused to sell off on this most recent pullback and putting up all these lines. You can see the white line here, this big thick one. That's the relative strength line. You can see it's breaking out to new highs before price. That's bullish. That being said, MACD doesn't look that great. TSV looks okay. When I go look at stochastics, it doesn't look that great either. So it's pretty mixed, but once again, if we're wrong, 2.5% signal, we don't risk much. The low a day is going to obviously be our ultimate final cut loss level, so we just don't risk much if we're wrong. I mean, even if you use this low back here in January, you can see you only risk a little less than 6%. Not bad overall considering the tape we're in. All right, everyone, enjoy your long extended weekend. There's a lot of other stocks I flagged. You can go check those out on the new positions page. Aloha.